Welcome to Beers with Rich. I'm Rich, editor of Under the Radar Report. It's great to be back. I'll get to the beer later, but this week we've got stocks, and more stocks. Well, the theme is, you guessed it. Well, you probably haven't. Now you might have guessed it. Yep, royalty. Let's crack it. Oh, it's not bad. It's not bad. 3 months ago, we picked 6 stocks of high enough quality that we considered them royalty. Can't remember which issue it was, but we picked them, and guess what? They've delivered 30+% return. Well, that's a royal return. A toast. Lithium producer Allkem, shipbuilder Austal, IT services company Data3, media group NZME, Forex trading group OFX, contractor Southern Cross Electricals. Thank you for your service. You may rise and rise and rise. So this week I want to talk about what's happening on the bigger picture, being some pretty big moves, and then why our definition of quality delivers, and we're going to go through some of the stocks. But this week's issue, small cap issue, we've listed 21 of them, so well worth checking out. So there's been quite a bit happening on the global equity and bond markets, with a big sell-off caused by US inflation or CPI data being for August being plus 0.1%. Expectations were for minus 0.1%. Well, I kid you not. I kid you not. You heard me right. It's basically, in line with expectations, if you ask me. So what's going on? That's why you're at beers, not just for the good booze. Basically, the market was going to sell off, I reckon. Like, the market's bigger concern is what's not about inflation, rather the lack of knowledge about China. So they're concerned that the growth engine in China is coming to not coming to a halt, but certainly slowing down. That's the bigger plan, because that's what's pumped all this savings flood into the world, and that's why, because they're diverting funds into pump priming their economy, that's the prime force of causing rising interest rates. This brings me to quality. What's quality got to do with this? Well, when the market sells off, basically stocks are sold indiscriminately by definition. So that includes stocks that are good, stocks that are bad, stocks that are average. Your aim as an investor is to build up a portfolio of increasing quality, which means taking advantage of these sell-offs, and then after the sell-offs, when the market starts, into building and building and building, taking profits along the way. You want to be looking for signs of euphoria. What does euphoria mean in market terms? IPOs. Basically, when you're seeing wall-to-wall IPOs, that's when you've got to be a bit nervous. So let's just, before I get onto the stocks, let's just redefine, or define, not redefine, but just go over the Under the Radar Report definition of quality. Well, geezer pleaser, that's one. Although it won't give you too much of a return. These other qualities will give you a return on the stock market. What's the first sort of point that we look for in a company to define quality? Customers. A company is only as good as its customers. What does this mean? Well, you want to have either loads and loads of, literally thousands or hundreds of thousands, millions of customers, where you're giving them a standard offer. That's a great sign of quality. Or you want a number of customers that are blue chip customers, that are large and growing, and that can be relied upon. Balance sheet. I keep mentioning it. It's the boiler room of a company. If that bursts, there's stuff that's going to hit the fan. So basically what you're looking for here is that the duration of the liabilities, so the length of the liabilities, is exceeded by the assets. So you want to make sure that the company can pay its bills and invest in growth. So investing in growth is very important. It's almost impossible to think if all you're doing is paying debt. Just ask the many mortgage holders that you might know. So next thing, you want to look at the operating model of the business. So a quality operating model means either you're getting a really good return on equity because you're looking at low capital requirements. It's much easier to get a good return on equity if you've got low capital requirements. Or if you have high capital requirements, you want to make sure that that money has been invested in high quality assets that are almost irreplaceable. So basically that you've got high barriers to entry, which in turn means high gross profit margins. Lastly, competitive position. So you want a company that has a good niche, so that's not going to be competed away by some giant in the marketplace. So let's go through a couple of stocks. Allkem, it's a lithium producer, and that's transforming itself into a global player, which means it's got an increasing stake in the future. We all know why that is. Batteries, batteries, batteries. So the company's raised enough capital to be self-funding and can take advantage of rising lithium demand. Another stock, Austal. I know I've mentioned Austal a lot in the past. That's because its quality it's been sold off in the past, but at those moments it got sold off, when it was coming out of contract of the big US fleet. They were opportunities. You have to believe in management. You have to believe that a company's asset base, i.e. its docks and its its shipyards, are quality. And what do you know? It got a big contract. So you have to be there ready to take advantage. Got to be in it to win it, people. Data 3, speaking of being in it to win it, this has been a slow burn operator. They've always had a really bulletproof balance sheet. They've always had high quality management, and they've managed to stick at it, and then COVID provided an opportunity for them to supercharge their profits. So the beer, let's get on to the other element of quality, a geezer pleaser. I've mentioned it before, I've drunk it before, it's Little Bang Brewing, South Australia. Well, a long way from Britain, as the crow flies, but hey, culturally speaking, maybe not that far. What's up next? Well, once again I urge you to check out this week's big report. We cover all 100 plus stocks in our coverage, and we outline in our research rundown, and we outline 21 that we consider royalty. Here's to the royalty factor. So next week we're moving on to oil and gas. So we've got an in-depth report on that, and we drill down on more stocks that you should consider owning for your portfolio in order to grow and protect your wealth. So here's to having beers with Rich, or being with beers with Rich. Thanks for your company. Looking forward to talking to you again soon.